Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Xavier Olivella, the CEO of ArtsGain, an investment fund which specializes in art. Art is an asset class which is attracting particular interest as a candidate for both process improvements and especially for wider distribution through tokenization. Xavier, thanks for joining us.
Thank you. It's a pleasure to be here.
Now, ArtsGain is an arts investment fund in which investors become co-owners of works of art, pro rata presumably to their investment. Now, where did that idea come from? Is it a very old idea or is it a new one which you thought up very recently?
Well, the idea came 4 years ago, and because art and the art market is our passion. So the art market is due to the complexities and inefficiencies of the art market. Price discovery needs to be in the hands of experts using big data analysis and knowledge. And historically, art funds were not able to utilize indexes to use data and compare them to traditional financial markets. Then we started around 4 years ago, first developing our own algorithm based on public data. And now we are able to track and compare the top 100 artists based on performance, volumes, demand, structure, and future expected supply. At the same time, during that period of time, we were able to follow the authorization in Spain to become an asset management firm. And now we are focusing on the top 100 artists of the world. Those top 100 artists are accounted for 80% of the overall returns of the overall art market. And at the same time, their artworks are more liquid. So higher volumes, more diversification, a global market. And overall, the overall market is estimated about $1.7 trillion. Just a very small portion of it are related to art funds. And we are trying to address this subset segment to deploy funds for the top artists.
Mm-hmm. Now, you just mentioned that you set yourselves up and are regulated as an investment manager. Can I ask you a technical question about the structure of the fund itself? In Europe, there are basically two choices. You can be an alternative fund, like a hedge fund, or you can be an ordinary mutual fund, or so-called UCITS fund. Which are you? Are you an AIF or are you a UCITS?
We are an AIF fund, and we are managing all our funds that we are creating as a closed-end fund, just to not only to accomplish the regulatory requirements, but also to ensure that the investors are safe and following the whole regulation.
Right. Okay. So you're a closed-ended equity AIF.
Yeah.
Now the artworks are, if I've understood your model correctly, kept in custody for 5 years or whatever the term of the investment is, and then they're sold. Who do you use as the custodians for that purpose?
Well, our main objective of an art fund is to provide our investors with value through capital appreciation. So we are trying to minimize as much as possible the transportation and the custodian costs. So if we are, for example, buying the artwork that is already in a storage at acceptable cost, we don't move it. So if we buy it in London, we keep it in London. And if we buy it in New York, we keep it in New York. So this is also related to an ESG component. So avoid transportation, at least when it's absolutely necessary. For example, when we are requiring an exhibition or something like that, no? And in the case that we need to move the artworks, we are using low emission trucks and using already established roads to minimize the impact on the air. No? Another also important aspect of our funds is that we are indifferent about the art movement itself. So historically, most of our funds were focusing on a mix of art styles like Impressionism, Cubism, modern, contemporary art, etc., to diversify. In our case, we are considering what are the key drivers of the art economy, luxury, and design by 2030. And then we analyze and they create investment themes related to those drivers that potentially can help us to predict in some way that will happen in the future and the implication on the art market. So, for example, just an easy example is the diversity. No? Woman and LGTB theme is a good and proven theme to invest. And then depending on every theme that we invest, the holding period could be longer or shorter. And then we develop activities for each theme that they are different and related to the specifics of the theme. So may require some years of custodian of their connection, or some others not, because they are starting an exhibition pretty soon. So in any case, coming back to your question, we are using specialized custodians in every location where our artworks are located. So we are working only with approved custodians. As we are an authorized asset firm, we are using only certified partners that help us on the logistics.
Now, could I ask you about financial crime compliance? You're obviously dealing with people who are selling valuable works of art. You're dealing with investors who want to invest in valuable works of art, which you clearly don't want to find yourselves dealing with money launderers. So is the regulation on anti-money laundering, know your client, countering the financing of terrorism, sanction screening, all that, is that an issue you have to deal with? In other words, checking that both the investors and the sellers are who they say they are. Is it a major problem for your business?
Well, this is a clear, absolutely, this is a issue that we need to consider, and we are spending a lot of effort to solve that issue. So, in fact, there are two sides procedures. One is for checking our investors that require to pass the KYC, ML, and SCFD, and the other part is for sellers and buyers. So we are also checking to whom we are selling or to whom we are buying from, and to ensure that there is no fraudulent issue in any of the whole investment process. So getting the right investors and involving the right partners and customers are our highest priority, no? In fact.
Is fraud, I mean, we often read about fraud being an issue in the art market. Is it a risk for your business? And maybe in particular, is the provenance of a work of art a particular factor for you? And the solution is sometimes put forward to having sort of digital provenance of works of art. So they have these unique markers put on them, so it proves that this really is a Tintoretto or whatever it is. So is fraud a risk for you, and is provenance a solution that you've considered?
Yeah, well, fraud is always a high risk to consider and to avoid. So we are using only verified provenance of the artworks, either but that they are digital verified, like, for example, Artori or Clear are using by the usage of the blockchain or other sophisticated technology tools, or in the case that is not a digital certification, then we are using certified appraisals from the National Appraisals Association, either if it's in France or England or in the US. No? In addition to this, when for every single acquisition of every artwork, and is included in our operational manual for the validation process, we are also including the validation from Interpol and art loss databases that probably they are the most two accurate databases about art frauds. No? An additional risk it's to consider is the money transfer, either when you buy or when you sell. So to avoid any issue, we are also using certified escrow accounts.
Right. Can I ask you a bit about the investors that you're seeking? I know you have this €100,000 minimum investment figure, so that kind of cuts out most of the men and women in the street. Are you going after ultra high net worth investors or high net worth investors, or are you looking for institutional clients as well? I mean, I made an assumption here, you're not looking for retail investors, as it were, but people have to be relatively wealthy. What type of investors are you looking for?
Yeah, well, basically our current regulation approval only allow us to sell directly to accredited and institutional investors, meaning that, as you said, no, high net worth individuals, also families, offices, and accredited organizations like banks, insurance companies, pension funds, fund of the funds. Indirectly, we can arrange arrangement that can be implemented by those retail bank accounts or other accredited companies, that they can create their own funds of the funds on grouping several investors to go to the retail. Today, we don't have this approval for going directly to the retail, but I think having this set up through an indirect channel, I think this will be exploding soon, because alternative assets are booming, and today are representing only 15% of the global invested asset and managed, and the expectation is to grow 2 digits in the next coming years. No? In fact, one of the issues that we can face in the financial market is that traditional financial education is often missing art, even that there are classes and certification about alternative investments. Art are not part of the curriculum, and then we are still, let's say, in a niche market because the lack of the education of the financial sector, and probably this will change, and it will change dramatically the explosion or the booming to go to the retail in the next coming future, right?
Well, I'll come back to that point you've made about broadening the range of investors you reach when we talk about tokenization. But before we do that, could you tell me a bit about the forms of the artworks you're investing in? Are we talking here of paintings, sculptures? What's your portfolio?
Well, basically, as I said before, our key strategy is to develop themes and select artworks related to these themes based on the predictions of the art, luxury, and design markets on the next coming future. No? So then, basically, having said that, typically we are using physical objects. 80% of them are paintings and 20% are sculptures. Even that it's curious that pandemic also promoted the increase of the sculptures, that they are moving from 16% previously to the pandemic area and to 20% that is just in a couple of years, because the promotion of the art outside was one of the key trends. No? In addition, we are moving as well on the moving into the NFTs, and we believe in creating NFTs either from digital native artists or creating short series on NFTs generated for the acquired physical objects. So in any case, any NFTs can provide additional value for investors in addition to traditional art. So, and same happens by creating specific themes. So if, for example, we create a specific theme of a woman or diversity, maybe we can develop an exhibition and create some NFTs, short series of NFTs attached to it, and also bags or other design elements that could be associated to a specific trademark, if the artist allow considering their rights, or even to link with the artist. So it's more or less, but overall, 80-20, it's physical objects. No?
Right. Okay. Well, since you brought up NFTs, I was going to ask you about them anyway. I wonder whether you or your investors, and maybe this is what you've just said, you thought about issuing the art you actually have in custody in the form of an NFT. You've talked explicitly about NFTs as a possible investment class if they look like creating value for your investors, but you've got all this art sitting in custody. Does issuing, and your investors own it, does issuing some of that art in the form of an NFT make sense for you?
I think it makes sense. The other problem is that let's say the regulator is not following us on the art, NFT art itself. So maybe we can consider NFTs as a series of collections or art specifics related to the art, physical arts that we are buying from. So this is, let's say, as you know, that the regulators are always behind the business, and the world is faster. and then we are not accredited yet to create an NFT art fund. No.
Right. Okay. And the investors haven't shown interest in that as an exit strategy from the investments they have in your fund. In other words, turning the fund, selling the contents of the fund in the form of NFTs hasn't been something you've discussed with the investors.
Yeah, this is something that we are considering and we are exploring, and let's say that we are able to create some NFTs to develop the art industry, and also sooner or later we'll be able to provide liquidity, no? Because also this helps us to solve this issue that is the most requested issue from investors, no? And today this request is coming that from the total global assets, that they are liquid, that they are 85% of the total. So that is normal that the investment managers are considering this. And let's say secondary, today blockchain and tokenization processes provides a way to provide access to a secondary market, and as a consequence we can provide liquidity. But let's say regulators are really learning today, and they need to adapt the regulation and their laws to those changes. But people like me that they are coming from the technology market, I'm facing really a breakthrough on how financial market is going to manage and to potentially to expand everywhere in the planet, no? So we have a clear example on the adoption of crypto market, that the today regulators were not able to stop the adoption of the crypto market, and I think the same will happen with the tokenization, no? Regulators are improving their laws and the way to manage, but they are very slowly compared with the business that is really moving fast, no? So we are exploring the possibilities of the tokenization by midterm, and probably initially this will happen in a closed world among the different investors of the fund, and later will be open to everyone, no? But it's clear that if the internet age that was Web 2 area has not been able to close the doors of the open fields of internet, I think the same will happen to Web 3 area, where now we are entering a different post-pandemic age where tokenization, metaverse, cryptos, digital arts, and collectibles will confluence under the same universe, no? Yeah.
I wonder, have you thought about, you mentioned the lack of secondary market liquidity, and maybe tokens can help provide that. Have you thought explicitly about actually tokenizing the fund itself in an effort to attract a wider class of investors, create more liquidity, and if you like, democratize, the phrase we use, investment in art as an asset class, and start getting a secondary market going in tokens in your fund? Is that something you're actively discussing as well?
Well, in fact, we are discussing as well, yeah. Let's say that also in the NFTs, this independently of tokenized or not, the NFTs are complex, so it's not easy. So despite that, you can buy it easily and buy because you like it. If you like to invest in NFTs, this is complex, and there is openness of the digital art market. In fact, it's pretty similar to the traditional art market, no? And then scarcity of the digital art is depending of the rarity trends, and this is being measured a very collection range of special characteristics. So, and second,
to be clear, I'm talking about tokenizing shares in your fund. and breaking them into smaller pieces so that you get over that €100,000 minimum investment threshold. You'd obviously have to change your regulatory status, but you could start to appeal to that man or woman in the street, which I mentioned at the outset, because they could invest €100 in your fund. So your fund might get bigger, you might have more liquidity, and you'd certainly have more investors engaged with what you're doing. That's what I was talking about, not NFTs, just tokenizing shares in the fund. Does that make sense for you?
It makes sense. The only issue that we have today is the jurisdictions that where we are today, that is in Spain. Also, we are moving to have an European passport in Luxembourg. We don't have this possibility as under the regulation of the alternative investment funds. Right. So you need to go to a different jurisdiction like Liechtenstein, Switzerland, or Cayman Islands, or Malta in case of Europe. So today, this is not a high priority in next coming 3 months, but it's our second priority in a midterm, in 6 to 12 months, to give our investors liquidity, and we are expecting that also regulators will allow us, will let's say help us to go in this direction. In any case, always it's may happen that we can make an arrangement with a third party, accredited company that has tokens that could be manage all the tokenization of the fund and offering to retail or to accredited investors, which is always possible.
Yeah. Now, those investors, can they generate income from lending the works of art which are in the fund? You mentioned exhibitions, for example. Exhibitions do generate income. I don't know whether you get paid for lending them the works, but certainly the exhibition itself will have entrance fees and so on. So is it, and you talk about NFTs as well, these can generate income from kind of ancillary activities too. So can your investors actually get an income, or has all their return come from buying it at price A and in 5 or 7, 10 years time, selling it at price B? Is it all capital, or is there some income as well for investors in your fund?
Well, in fact, we are not allowed to provide lending secure type of services, unless that we are using a third-party company that we can provide these or to get these services from. In fact, our main activity is to create yearly gains. It's about developing activities to loan our artworks to museums or to art institutions, or providing the artworks to companies that they can be interested to show in a closed place. No? But we are not, let's say, providing these lending services itself. No?
Now, you've mentioned a number of times things you're not allowed to do. And I wonder if we could explore that a bit. ArtsGain is, I understand, regulated in Spain. Clearly, that imposes some limits on the type of investors you can attract. I believe there's a €500,000 in savings, free capital people have to demonstrate, or they have to show that they're an incredibly sophisticated art expert and know what they're doing. But am I right about those constraints? And are there other constraints which your regulator imposes upon you?
Well, basically, this is let's say the regulator imposes these restricted rules, because we were the first authorized art asset management firm in Spain, and then but we are getting accredited and institutional companies that they are able to invest, and also let's say for us, we started to request a crowdfunding platform process to democratize as much as possible the art investments, but finally we get only the regulation for a mutual fund. No? Now we are in the process to moving to Luxembourg, and then we'll be able to target other European countries. And in case that we are interested to address other countries with regulated companies, we need to work with them and to approach and to target those countries indirectly. This is, let's say, the pain when you offer a regulated fund in one way, but the other way it's more safe and it's more attractive for the investors to be safe in their own investments. No?
So Luxembourg is going to enable you to do more things than you can presently. Now, the other thing you have to do, of course, is find works of art to invest in. And I've noticed you've got this network of advisors, not just in Europe. You've got somebody in London, you've got somebody in Verona, somebody in Düsseldorf, but you've also got people in the Middle East, in Dubai, you've got people in North America, New York, and you've even got somebody in Hong Kong. Is the responsibility of that network of advisors to help you find investors or to find works of art, or is it to do both of those things? What are they for?
Well, in fact, we need to differentiate between investors and art collectors. So investors are a target where our authorization, directly or indirectly, is allowed us. No? But while art is global, so specifically when you are talking about the top artists of the world, and we are talking about the globe. No? And then what we did was recruiting people where it makes sense, depending of the scope of these top 100 artists. No? New York, London, and Hong Kong are the top cities of the art trading where we are present with our art advisors directly. Now, Paris is an emerging hub that is addressing it directly by our advisors and their own network of partners. And Paris is an emerging hub of European art after the Brexit. No? Dubai, for example, is also an emerging place to capture potential collectors to sell our artwork, and specifically after the booming of the art museums in the Middle East and the wealthy area. No? And also in the other two cities where we are present, Düsseldorf, the decision was based on capturing how the German postmodern art and the future of art contemporary art are closer to the most important art schools of Germany. And in Verona is related to be present in Italy, where not only is reference to all masters, but also is to be closer to the Biennale in Venice. No? And I think it's very important to be the right art cities, to be closer to the trading sites, and also to be linked with the key free port areas of the world, and where the collectors also are buying from or selling to.
Xavier, I have one final question for you, which is about how you, ArtsGain, get paid for running the fund, managing the fund. I understand you have a kind of hedge fund style fee structure, which is a 2% annual fee with 20% of the performance gains above a threshold, so a 2 and 20 model. And my question is, that obviously aligns you with the interests of the investors themselves. If you don't perform, you don't get paid that much. But how competitive is your fee structure with the normal process of buying and selling and investing through the auction houses, the major branded auction houses?
Well, in fact, let's say we created ArtsGain as any other venture capital firm. So we are not competing against auction houses. So let's say that we are managing as any other venture capital firms does for our startups or companies. So we are investing in art, but at the end of the day, we are trying to make our setup in line with the rest of the financial market to avoid discrepancies and misunderstandings with that market. No? We are not competing against auction houses, and in fact, we are not going to buy from them because always the auction houses are carrying a premium price. but we are counting on them on their own sales capabilities, because if we are interested to sell an artwork, the premium price is going to be paid by the buyer, not by the seller. No? And also, what we are trying to is to be focused on the venture capital, like any others are doing. No? Be worried about the buying cost, stay slim as much as possible to be attractive as operational cost, and to buy an attractive price to sell high as much as possible. So this is overall our gain for investors for our customers. No? This is the main reason that we call it ArtsGain, no? Specifically.
Xavier Olivella, thanks very much for taking the time to talk to us about ArtsGain.
Thank you very much, indeed.